live on WNTR ETF. And here's our disclaimer. This video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing in this content should be construed as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions, including buying or selling any securities. So first up, we're going to dig into the macro regime. Four categories here. We have U.S. stocks that are in an uptrend and potential correction watch. Gold has had a great strong rally all year, and it is in a correction. Oil is in a 3-year range at the lower end of the range and a recent buy signal. And Bitcoin is in a short-term downtrend to the low $90,000 area. And it should bounce from there. We are still long-term bullish. Let's pull up some charts. So first up, we'll talk about stocks. So U.S. stocks, this is the S&P 500 options index. And you can see very clearly we've got a great uptrend. There is a recent sell signal over here as the from all-time highs. We've dropped several days in a row here. We are right at this trend line. I think there's a good chance we're going to bounce here, similar to previous corrections we've had during the year, back in August, back in late August, and again a few weeks ago, October 10th, we had a very sharp drop with an immediate recovery. So we're probably going to recover on this, but we'll have to see how it goes this week. If we drop much further below here, we're going to want to look for a corrective phase to start and to let a new base be formed before the rally continues. When I look at the overall markets, I like to look at volatility. So I have a set of charts here related to volatility. So this is our the same index, S&P 500. What I'm doing here is I'm measuring the ratio of the VIX to the 3-month VIX. And what you see is when the VIX spikes higher than the 3-month VIX, this is where the fear has entered into the market. And you can see back in October 13th and on the 17th, we had some big spikes here. And then we've since recovered back down to a green area where the market was allowed to rally. And again, the last few days, we've had this indicator going up a little bit. In a similar vein, you can take the same data, and I built this nice little indicator that shows when the markets become stressed with volatility. This will flag red, and it'll flag green when the recovery or when the volatility drops back down. And again, you can see here a little bit of a change as we're about to cross over to the red. Another indicator I like to look at for the overall market is breadth. So here I've got a chart of the number of stocks that are below their 50-day moving average. And here you can see we are clearly in a downtrend. Most stocks are below their 50-day moving average, less than, near the 50% mark. And what we want to see for a really clear buy signal is a capitulation, where this indicator goes all the way down to 20% or less. That's usually during a major downturn like we had last December, and again in April 7th, 4th, 7th. We've had a great signal here that this is the time to buy the markets with two hands. But here we're kind of in no man's land. It could recover from here, or it could continue dropping. So again, U.S. markets are in an uptrend and a little bit of a correction watch. All right, let's take a look at gold. So actually, let me pull up the cleaner chart here. So this is the gold futures chart. So as you can see, we've had a multi-year uptrend, a nice basing happened in early 2025, and then a breakout finally on September 2nd, where gold just, continued rallying almost every single day. This looks to me like a correction where it's starting to base out. You can see the sell signal was right here, and even the red bars here on my histogram are starting to improve. There's a good chance this will start a new rally immediately, like in the next week or so. Also, it could very well be that we enter into one of these phases here where we rally back up to the top and then correct back down again, and then back and forth for an extended period. So that's what I'm looking for. I do think it's a good time to buy. It's probably the bottom of a range, but it can also do this kind of thing where it goes up a little bit, doesn't get to a new high, and then it takes another leg down. So very bullish gold. I have a large position in my traditional accounts. And I think this is a good time to consider the GDXY ETF for income. And oil is next. So I'll pull up again the crude oil futures contract here. So here, oil is in a multi-year box rectangle. So you can see here from about $75 down to $53. There have been a few very short spikes below this rate. Those would be very viable dips if that were to happen. And we're having trouble actually rallying. So my thought is on oil that we want to take this flag here as a buying opportunity, and then potentially sell when we get back in the 70 range. If the economy slows down more than expected, oil can certainly drop back down here into the 50s, so into the low 50s. So we're kind of in no man's land. I do think it's a good time to nibble and start positions in oil and oil-related equities, but that's for the long-term account, not for the income account. And fourth is Bitcoin. You pull up the Coinbase chart. So Bitcoin obviously has been rallying for years and years since 22. We bottomed. We had a nice correction over here for several months, and then since September of 24, a little bit over a year ago, we started a new rally and a breakout. So you could clearly see the breakout and the buy signal that occurred at the bottom at the end of this corrective phase here, and it turned out it was the right place to buy, and you can see the buy signals continued. And then we kind of have this kind of double top thing that happened here, and it started rolling over and went into a corrective phase. The correction went right to the 0.618 level of the previous run here, the Fibonacci retracement level, 0.618. Then that's where it bottomed, and again gave a nice buy signal right here, and gave us a chance to go long again. And again, it looks like almost a triple top or a double top, however you want to count it. And again, it's rolling over, and I think it's behaving very similar to this rollover. So my thought is, let's see if it can bottom right here at 94.3. It could for sure crash through there, but this is why I'm tactically bearish on BTC. I think this could take a month or so, maybe 2 months, to kind of base out, and then we'll see how it reacts at that time. If the Bitcoin rally is going to continue, we're going to at least meet the tops again at 126, but we could even go to 175 and continue the rally with equal measure than we did from here to here. So that's kind of where I'm thinking things are at for those. I will give updates on this every week or so. Next, we will get into discussing winter. So again, in our strategy, we have some bearish tactical funds. Winter is one of the bearish tactical funds. And let me pull up the YieldMax website just to walk through the description of this fund. So we're getting weekly income from this fund, and it's basically a synthetic short on MicroStrategy, or now known as Strategy. And it's a synthetic short, meaning they're buying puts and calls to express the short position. In addition to having the synthetic short position, they also have puts that they're selling to the market, and the puts are creating income. So this is supposed to go inverse to MSTR, and as I just showed, Bitcoin is in a downtrend and has been for a little while here. MSTR actually has been in a worse downtrend. So recent distribution rate based on the last distribution, the weekly distribution, shows that's 115%. Probably won't stay there, but that's the current expressed distribution rate. Here you can see the fund has not performed well overall because it just doesn't have a lot of history in this strategy. And 1% expense ratio, and looks like it's got a small discount to the net asset value. And here you can see the history of distributions. They switched to weekly distributions recently, so you can see here 73 cents was the last weekly and 59 cents before. It seems to fluctuate quite a bit, so we'll have to see where this settles out now that they've gone to weekly. And top holdings are not very interesting because it's a short position using options. So most of their positions are treasuries. Most of their holdings are treasuries. All right, so let's go to MSTR. So this is a chart of MSTR. As you can see here, it had major rallies multiple times in the last few years since 24 and 25. Here you can see the most recent time frame here between July and today. We've had a major crash on this, and this is mostly the MSTR is like a levered play on Bitcoin. Bitcoin has also had a downtrend in the last few months, and MSTR also has a large premium over its Bitcoin holdings. I think it was up to 4%, 4 times the value of the Bitcoin holdings was their premium to NAV, and therefore this premium was like not sustainable, basically, and so now it's correcting back down to I think 1.5 times the premium of the NAV, and so eventually this will base out and the selling will catch up to the value of the Bitcoin on the books, and at that point the stock will start performing more like Bitcoin. But you can see here, obviously a big downtrend. The sell signal would have been over here for MSTR back at July 21st, 22nd. I was invested in MSTY, which I was very bullish on MicroStrategy and Bitcoin. So you can see here MSTY also had its turn around July timeframe. So now our strategy for improving our return on MSTR and MSTY is to the stock has less history, and therefore my little charts here don't show everything, but you can see here at the time when MSTR was selling and it had its sell signal, that was the buy signal for winter right over here. So I started buying winter last week, I started my first position, and I'm going to continue watching this. When it starts giving a sell signal on the winter ETF, I may sell down my position at that point. Again, I'm looking for that Bitcoin bottom at 90,000 K, which will probably conclude the bear market for MSTR at the same time. So I'm going to pull up the portfolio. So I have a Google spreadsheet where I'm maintaining all kinds of financial information. But the main thing here I wanted to walk through is just to show you kind of how the portfolio has been doing. So I recently increased my the amount of margin we're using, the amount of cash in the account, and I've increased some allocations in the last couple of weeks. At the end of October, we had a monthly income of $2,000, which we annualized to 24,000, and the value of the portfolio after I made some suggestions was at $136,000. Our current value after a few days of November is we're at 139. I have 28,000 of cash available to invest. I'm using some margin in one of the accounts, so $9,000 worth. And I am wanting to target a 25% margin. So I have additional margin of $25,000 that I can use. Our target allocation is 2% for each of 50 tickers, up to 50 positions, and that would be $3,500 roughly. So we'll just kind of walk through the portfolio. So the first group is our debt-based income, and you can see here we've got in the blue here we're under allocated to most of the target allocations. The only position here that looks like it's on a buy signal is KIO. Let me pull that up just so you can see the chart. So this, this CEF has just played a buy signal in the last week or so. Kind of watching to see if it comes back down and gets back to red, then that was a false buy. So kind of wanting to see this base out a little bit, but it's definitely worth considering, adding to my KIO position. Anyway, I'm very close. Actually, I'm very close to the target allocation. So I think I'm, sorry, 34, 32. Yeah, I'm only about $50 from my position here, or from my target allocation. So probably nothing much to do here with KIO. So over here we've got some equity funds, and looks like I could move this over here. All right. So on some equity funds, we've got USA that's down 10% from where I purchased, and it has a low allocation. Let's take a quick peek at that one. So this is still in a sell signal, so nothing much to do here, and it's in a downtrend. So what we want to look for is for that buy signal that thrusts the stock in a different direction. But this particular one is still quite a downturn, or in a downtrend. I like the shape of this candle. It looks like a hammer. This could be the beginning of a turning point, so we'll have to take a look next week how things are going with this one. But it's close to meeting our buy rules, where it's in a long downturn, and we'll have to see how it bases out here. I'd like to see it kind of show a green candle that retraces a good portion of the last move down here. And all right, so let's take a look at BDCs. I'm planning to buy these this week, PBDC and FSK. So PBDC is has basically given a buy signal last week and the week before. With this little retracement, I want to see how it stabilizes here. If it stabilizes here and starts rallying a little bit, then we'll get a second buy signal, which would be a good time to get into this one. And FSK, let's see. This has a similar, well, not similar. This has also a buy signal, and it looks like it wants to base here. We're going to want to take a look at that and see if we can get in on this one as well. Buy back in. I like these because of the high income. So, for example, FSK, we have an 18% distribution rate or dividend rate, and then PBBC has a distribution of 10.52. All right. Then the other two I have here, ARCC and VPC, actually have a higher yield than FSK. So we're at a pretty high yield scenario here for these BDCs. All right, so covered calls, I guess not much to highlight here, I don't think. I'll pull up the chart for tail just so you can see that. So tail is basically cash with puts. So it's holding U.S. Treasuries, and it has some puts. So you can see here what happened during the tariff fiasco in the early part of the year. And actually, this started around February 20th, where tail started rallying, gave a large buy signal, and you can see it went in a completely different direction from previous. And the puts got high value. There was a lot of thrashing back and forth here. This would be a good time to start selling the puts or selling tail to monetize that, and then start buying back into things that have been down. So you can see here, we did get a sell signal right over here on May 2nd. And so now where we are is we're waiting for that. We're waiting to see, it should just bounce along sideways, but we're waiting to see if there's a, growth of values of puts, which would be because of volatility increasing. All right, and in the ultra high yield bucket, you can see here I've got a very large position in Misty. This was my original high yielder that I was playing with, and I went all in on that one, bought a large position, and it was going great for half the year, and then it reversed, and I've been giving back a good amount. So I'm down 55% on my cost basis, which is very, not great. But I don't want to sell yet. I kind of want to keep it because I think it can recover when MSTR starts basing with Bitcoin and recovering a little bit. So I'm not planning to sell. I might trim it a little bit in order to move into other positions, but right now I'm keeping it as it is. And just so you know, yes, I lost about 16,000 looking at this. My actual income for this fund since I bought it, we made $3,700 and or 13% of the original cost basis. So this is kind of my indicator to show, how much have we made on the fund, and is it, are we going to be using the house money eventually when we paid off the original investment, and we're using house money. It's a lot more fun to keep the funds around. All right. Well, I think that's it for the portfolio update. I don't want to take too much time on that. Next up, I wanted to mention next video will be about using cash and margin, and I will showcase the box ETF that I'm using, but also 3 other ETFs that I'm planning to use in this portfolio to represent cash or bond equivalents. So next episode, we'll give the market regime update again. We'll do fund deep dives on Box, TUA, PFIX, and iVol. I'll talk about how I use margin and cash to manage risks and increase yield, and then we'll do the weekly portfolio income review. If you like this video, please subscribe. Please leave a comment. I'd love to hear positive or negative comments, as this is my first YouTube adventure. And please feel free to share the video with others that are like-minded, that are income investors, and just help this channel grow. All right, thank you very much.